Hi there, and welcome to Commodities. I'm Lindsay Biscaya, filling in for Andy Bell today. We'll take a look first at how some key commodities are trading today, starting with energy prices. We can see the price of oil up more than 2%, rising to its highest since August. This comes amid concerns over the U.S.-Iran conflict, which is ongoing. Gas also driven by those higher crude oil prices. Natural gas sitting down today. If we take a look at where some of the metals are trading, gold wavering near the 5,000 mark today, currently slightly down. Silver trading up, though, and we're seeing copper moving lower today as well, almost down by a percentage point at this point as traders focus on the next moves by the Federal Reserve, already looking ahead to that. And if we look at where some agricultural commodities are trading today as well, wheat is hitting a 3-month high today as dry weather hits the U.S. plains. That seems to be affecting the price of wheat. It's up almost 3% at the moment. Soybean futures up 0.7%, and corn also is actually down just ever so slightly. And here's some of the stories we're watching for you today. Vale has agreed to sell most of its stake in the Thompson Mine nickel complex in Manitoba. This comes in a move aimed at optimizing its metals business. Vale signed an agreement to partner with Canada Growth Fund, Exira Minerals, and Orion Resources under those terms. Now, the consortium will form a new company called Exira Nickel, and Vale will retain 19% of that new company. The Thompson complex includes 2 underground mines as well as a mill, and Vale will get the nickel concentrate produced at the mill. B2 Gold is one of the biggest decliners on the TSX today. Shares are slipping after the gold producer reported adjusted profit in its latest quarter that missed estimates. It also posted gold sales that came in below what analysts were expecting. B2 Gold says it now expects gold production for the year of up to 970,000 ounces. And we're watching shares of Nutrien today. The Canadian fertilizer company posted profit that topped estimates in its fourth quarter, but reported revenue that fell short. There was also shortfalls in key areas, including potash, phosphate, and nitrogen. On the upside, Nutrien raised its dividend, approved a new share buyback program, and says it expects to solidify a path for its phosphate business this year. Well, amidst the precious metals surge of last year, Pan American Silver posted record fourth quarter and full year 2025 results. The company expects to increase its silver output further and has hiked its quarterly dividend. For more, we were joined earlier by Michael Steinman, President and CEO of Pan American Silver.
Very strong cost control on top of it. And then, of course, metal prices did the rest. So as a combination, those are the strong results. Record financials across the board. So really, really good quarter and very good year.
Now, any concerns with silver right now? It's been extremely volatile. How are you working with that volatility?
Well, don't forget the average silver price for Q4 last year was only about $58. So we're sitting close to 89 now, so way, way higher in Q1. So I'm very happy where silver prices sit. Of course, there is more volatility at its high prices. We see lots of swings daily, but our costs are in the mid-teens, so no worries at all. I'm very happy where it stands. We were a very profitable company when silver was sitting at $36, $35. Obviously, that's the reason why now you see these big windfalls. $1.2 billion free cash flow for last year, $553 million free cash flow for the quarter alone in Q4. So really strong results.
And with that free cash flow, what are your plans for it?
We have some growth projects that we are looking at. A big project in Mexico at La Colorada that we're going to build out that will add even more production in the future, and also a potential expansion at our large mine Jacobina in Brazil. So lots to do with it.
And with Mexico, I just asked the same question earlier. Any concerns with security and safety down there?
Look, we are very aware of everything, of course, that's going on in Mexico. We are working there for over 30 years, and we'll continue so on. Keep doing what we are doing. We have large operations there for many decades, and we'll continue to look at all the situation and monitor it. But yeah, no big concerns right now.
And we were just looking at your numbers. You're forecasting a 14% rise in silver output. How much is that expected to cost, and where is that going? Is the demand there that much?
Oh yeah, absolutely. I'm sorry, I just adjust a bit the camera here. A lot of silver demand in the world. We are actually the sixth year of a deficit when you look at the silver side. A lot of demand for AI, for electric cars, for clean energy production, solar panels, etc. So about 65% of all the silver is used every year for industrial application. This will grow in the future, as you can imagine, will continue. And so hence we see actually a deficit in the silver market now 6 years in a row, hence the big run on silver prices that we see now. Our growth that comes mostly from the new acquisition that we did last year, when we bought 44% of Mexican mine, Juanicipio, which is actually our lowest cost producer, or one of our lowest cost producers. So it will be a great combination again of adding additional about 14% of new silver production at even lower cost than what we had so far. So great combination again with higher prices this year.
And what's making that mine the most efficient?
It's the grade. It's a high grade mine. It's a brand new mine that we share. It's run by Fresnillo, and we are partnered there in the mine. And it's a very efficient mining method and a great ore body with very high grade. So that combination obviously makes it very low cost and very efficient production.
And just going back to the mention of the deficit, do you know how long that's forecast for, or how long you're forecasting a potential deficit running for silver?
Oh, I think that will continue for many, many years to come. Don't forget, silver is mostly produced as a byproduct from copper production or gold production, but because copper and gold prices are already very high, there's not many more new mines coming on. And it's very, very hard to have silver mines, primary silver mines like we are running. They're hard to find. They're very difficult to find and expand. And so there's not such a direct correlation. So if silver price goes up, not automatically more production comes along. So that makes it, quite strong. And I'm very positive. I think we're going to see more volatility in the silver price because where it sits, but I'm very positive on the price going down, the next coming years.
And with that volatility, how do you see the dividends going? You hiked the quarterly dividend. Is that something you could see continuing?
Yeah, 29% increase of our dividend. Actually, it's a third consecutive increase of dividend. Every quarter now for the last 3 quarters, we hiked the dividend. Of course, we are sitting on about $1.4 billion cash right now. That's growing very quickly. Happy to have the shareholders participating in that through our dividend. We paid about $230 million. Last year, and that will increase now with this increase. And I think, as long as metal prices are high, our dividend and our sharing of that cash flow with our shareholders will obviously continue.
And now you mentioned that one partnership. Any others in the works over the next little while?
Yeah, there's more projects we're working on for sure. It's a bit early to share them already with the market, but we're always looking around, always looking for great projects, for additional high-quality production, low-cost, long lives. And, that's how the company was grown, how the company grew really from a kind of a small company when I started with the company to the current size. And we'll continue that theme going forward.
Okay, and we're just going to go in another direction, not really, but your thoughts on gold. Where do you see gold prices and demand in 2026?
Yeah, and look, we're actually producing quite a bit of gold as well. And so gold is important to us as well, not only silver. By the way, silver is not occurring on its own by geology. You find it with gold or with base metals. Hence, we produce all those metals as well. And look, I'm very positive on gold. You see a lot of gold buying from central banks across the globe, a lot of really debasement of US dollar. I think that will continue. We see very strong buying from those central banks. We still see a lot of activity on the ETF as well from obviously smaller and large investors in the gold for very similar reasons. And I think we will see very strong gold prices here going forward.
That was Michael Steinmann, President and CEO of Pan American Silver. Up next, Oceana Gold reported record fourth quarter revenue and tripled its quarterly dividend. We will chat with the President and CEO, Gerard Bond, right after the break. Stay with us. Vancouver-based Oceana Gold is trading slightly higher at the moment after missing fourth quarter earnings estimates despite record revenues. The company is tripling its quarterly dividend and expects higher production this year. So for more, joining us now is Gerard Bond, President and CEO of Oceana Gold. It's good to have you join us. Thanks so much.
Thank you, Lindsay. Great to be on this program.
So you've tripled your quarterly dividend. You've approved doubling of share buybacks to $350 million for 2026. What do some of these decisions mean, or what's behind some of these decisions? Does it mean you're going to focus less on M&As?
Well, what it means is that the business is performing really, really well. And, the management over a number of years has had a plan how to get the portfolio right, get the assets performing as we've intended to, deliver on our production guidance. And what the increase in capital returns to shareholders shows is that we're confident in the future of the business, our performance, our growth. And with the strong balance sheet that we have, and given the returns that we've generated to the bottom line in free cash flow generation, it's timely to give more back to the shareholders.
So will you be focusing less on M&As and also CapEx for 2026, or not so much?
Oh no, we're investing much more in growth projects and much more in exploration in 2026. We've got a really exciting development called the Waihi North project in New Zealand. That's one of the world's best undeveloped gold mines, and so we've got the permit and we're going at it at full strength this year. We also have the Palomino underground development at Hale that we're investing in. M&A, to answer your question, I mean, that's something that we always have a look at to see what's available. At these prices, it's obviously harder to find value in acquiring other assets, but we do scan. We look at everything.
Okay, yeah, you were mentioning some of those mines in the analyst call today. You also touched on labor cost inflation in that earnings call today. How much of an impact do you expect labor cost inflation to have in the year ahead?
Well, it's reflected in our guidance in the year ahead, which I would say that our overall all-in sustaining cost is expected to reduce by 7% year on year. That's as a result of greater production coming out of our largest producer in the Hale Gold Mine. On labour costs, we have real inflation that we have to deal with to keep our workforce appropriately paid. It's in low single digits. Labour is about 50% of our cost base, so we're seeing low single digit inflation in our cost base. But as again, our 2026 all-in sustaining cost year on year is projected to be 7% lower.
Okay, yeah, and I know you say that's reflected in your guidance. You're also forecasting a 12% increase in output for 2026. I'm wondering, will labor costs factor into that at all?
No, it's quite the opposite. So we have an assumption about labour costs. So we're assuming our labour costs will rise with inflation of around 5%. And the increase in gold production that we're producing out of the Hale Gold Mine, 35% increase year on year. That unit cost reduces as a result of that growth in overall gold production.
Okay, got it. When we're talking about overall gold production for 2026, you say you're increasing production. What's your outlook, though, on gold prices and demand for 2026?
Look, the gold prices that we have today at around $5,000 an ounce are much higher than the $3,500 an ounce that we had in 2025. And that was a year where we made a tremendous amount and record free cash flow. I see the gold prices being around the $5,000 an ounce mark, could be higher. All the factors that have driven gold price to these levels seem to be still present. Central bank buying remains strong. De-dollarization remains a theme. Stagflation remains a risk. And geopolitical uncertainty remains high. So we don't set our business activity by reference to a gold price. We focus on safely and responsibly delivering our production guidance, keeping our costs low, maximising the cash flow generation. But certainly at these gold prices, we're primed to deliver even more free cash flow than we did last year. And that was a record.
Okay, so then my next question was going to be like, what should the price of gold be for you to reach your dividend and buyback goals? But I take your point. Like you say, you don't really set your goals based on the price of gold. Is that right?
That's correct. And so at a price of gold even lower than it trades today, we're confident in being able to triple our dividend. We're confident in being able to double our buyback program. That gives a 112% increase in the $200 million that we gave back to shareholders last year. So we're really showing confidence in our business. We're showing confidence in the margins that we make from our activity and the future of the company.
Something also interesting is you plan to list on the New York Stock Exchange in April of this year. Why is that? Like, is the TSX falling behind as an option for Canadian companies, even mining companies, which obviously material stocks do quite well on the TSX?
Yeah, I mean, we've long been listed on the Toronto Stock Exchange. What we have uniquely is 50% of our gold production is based in the USA. And the USA is also the world's largest, deepest capital market. And we think that by listing on the exchange, in addition to remaining listed on the Toronto Stock Exchange, we will increase the universe of potential buyers, improve liquidity, and that drives value for our shareholders. But this unique calling card, as it were, of having 50% of our gold production coming out of the USA just compels us to be on the New York Stock Exchange.
Okay, Gerard Bond, President and CEO of Oceana Gold, joining us. Appreciate your time today. Thanks so much.
Thank you, Lindsay.
Up next, we are watching shares of Discovery Silver, which declined today despite beating on fourth quarter estimates. We'll be back with more on that in a moment. Discovery Silver shares fell today, even though the company beat in the fourth quarter and on their full year 2025 results, which was supported by the Porcupine Complex in Ontario after establishing itself as a new Canadian gold producer. So for more, let's welcome Tony Makuch, CEO and Director at Discovery Silver. It's good to have you join us.
Well, thanks for having us. It's good to get a chance to speak to you and give you. We got a lot of exciting things happening. We're lots of good things in our industry and with the company. So,
and let's dig into some of that because you reported strong results for both the quarter and the full year of 2025. Other than the Porcupine Complex, which is in Timmins, Ontario, what contributed to that? Do you think?
The good results. I mean, well, Porcupine Complex was a significant driver in terms of production growth quarter over quarter, lower costs, a lot of good exploration success, and a lot of, our outlook is pretty strong even in terms of what we're going to be doing in 2026 and how we're going to continue to grow quarter over quarter 2026. We do have a goal to get to over 500,000 ounces a year over the next few years. We think we're on a good path there. We do. I mean, the other thing in the company that really sets us aside is we've got one of the best development projects in the silver space globally, and a Cordero project down in Mexico, which we're just waiting for a permit.
Okay, and you're also moving into the gold space, right? Discovery transitioned into a growing Canadian gold producer last year. What key factors influenced your decision to do that?
Well, I mean, in terms of that, I mean, I guess we have a lot of experience, a lot of insights into the, into the gold space, especially up in northeastern Ontario, and the opportunity to pick up the Porcupine assets from Newmont was definitely something we wanted to do, and acquiring that and then advancing those projects. How do I want to put it there? The value creation I've seen with that. Not only did we understand what was here, and it was pretty good geology, and you had a mining operation, a gold business that's been producing at 250 to 300,000 ounces a year for a long time, and could be for another 10 or 20 years. We demonstrated that in our PEA, a technical report we put out, but I think the biggest thing here is how we with the ability to grow that production and turn Timmins, the Porcupine region, back to a tier one asset in the gold space. And our vision here over the next few years to grow up to 500,000 ounces a year and do that for 10 plus years, and be able to take that to at the lower half of the cost curve for the industry. So we want to set ourselves apart. Demonstrate what we can do, and then have a tier one gold asset in Canada and Porcupine, and as I say, we have a tier one asset in the silver space down in Mexico.
So it sounds like you have that confidence, right? Because you are going to be competing with some of the very established Canadian gold companies throughout this year and beyond.
Well, yeah, but I mean, part of it is having the right geology. That's the value drivers in our business. With diamond drilling and what you can do, and recognizing good geology and then putting the money to work, we do that. Second part is how we develop and build the mines, and invest in the business. I think we got to be good at that, and we have some great development projects, both in terms of growth production projects in Timmins, the ability to build 2 new mines in Timmins, over the next few years, as well as, like say, build Cordero. Then it's part of it is, how we operate and what, we want to be responsible operators, both in terms of protecting the environment, sustainability, and really recognizing and responsible for community and people, but also producing at the lowest cost and highest productivity as possible. And then, that gives us the opportunity to further grow with other acquisitions, et cetera, which we've been demonstrating before. So we know the business well. We know what we want to do, and one of the big benefits we have, especially in Porcupine, is we have a strong management group with a lot of experience in the region, and it's where we're from, and we've all worked in various times in the industry in this region, and so we know how to work there. We know the people, we know the geology, and we know the work methods.
I'm wondering if you can comment as well on just like the current price of gold. We've seen a lot of volatility throughout the beginning of 2026, and whether your company, obviously, how do you contend with that volatility that we might see throughout the rest of this year?
Yeah, I mean, we like to predict, and we feel, definitely we're in the right gold market. And, sometimes, I've been a part of, we're working in the industry, maybe we dated ourselves a little bit by, all the experience we've seen, some highs and some lows in the gold space. One thing we recognize, we're price takers, we're not price makers. What we do, the opportunity we have now with the high gold prices gives us the ability to invest. We're investing heavily into our business, both to reduce costs, to discover new deposits, to invest in the infrastructure in order to mine them, mill them, and et cetera. So we invest now and get with the ability to get our costs down. We need to be in the lower half of the cost curve. We really want to target to be below $1,500 an ounce, all in sustaining costs, even around $1,250 over the next few years. And that's what we have to be, because we don't know where the price of gold's going. And if it's where it is today or not, then we'll be very profitable and create good returns for our shareholders and for all the stakeholders.
Okay, so obviously investing a lot to expand kind of into that gold market, but do you continue to see opportunities in silver as well?
Oh yeah, well, the silver space is. Silver is over, $70 an ounce. We did our feasibility study at Cordero and demonstrated that it's one of the best silver projects globally, and we did our feasibility study at $22 an ounce silver. Okay. And if you look at the silver prices today, I mean, again, this is definitely a very a tier one of a very how do I want to put it? It's a distinguished project in the silver space. Yeah. It's the right metal mix for what's going on in the industry. You got reserve. You're going to produce over 240.
Okay, sir, we're going to have to cut you off. I'm so sorry. We're out of time. That is Tony McCooch, CEO and Director at Discovery Silver. Thank you for your time, and thanks for watching Commodities. The close is next. Stay with us.